Hello, we'll be doing the central bank. We'll start with the next part of the banking chapter. We are done commercial banks. Now we'll start with the central bank concept. Commercial banks are banks which are set up to earn profits, but a central bank motive is not earning profit. It is the regulatory authority of the country, regulatory authority of the banking and the financial structure of the country. Okay, look, the banking business is based on trust. When I deposit money with the bank, I need to have the trust that the bank is not going to misuse my money and I am going to get it back whenever I want the money, right? Without trust, the banking business would not have survived, right? It is the central bank which makes sure that the commercial banks are able to maintain the trust of the customers. Okay, it's the regulatory authority. Its work is to organize, supervise, regulate, as well as develop the banking and the financial structure of the country. It is the apex institution. The India Central Bank is the Reserve Bank of India. It was established on 1st of April 1935. Now let's have a look at the role of the central bank. Now let's first do the difference between central bank and the commercial bank. The central bank is the apex institution of the country. Commercial bank is a constituent unit, a part of the banking system. It focuses on the central bank focuses on social welfare, but commercial banks are set up to earn profits. The central bank's work is to mobilize the saving and channelize them into proper use. The central bank's work is to ensure proper functioning of the economy, but the commercial bank does the work of collecting people's saving and putting them into proper use, like giving out loans to the people who need it. Central bank deals with government, other banks, and financial institutions, but commercial banks deal with the public. Then central bank is owned and managed by the government only. Commercial banks, there are some commercial banks owned by the private where they act as shareholders, and some by the government. Then central bank enjoys monopoly of issuing currency, means they have the right to print notes. They are the only ones who can print notes. That is why they are said to have monopoly. And commercial banks have the power of creating deposit money. Deposit money means we can deposit our money in the bank on the basis of which we can withdraw and use it anytime. That is known as deposit money. There's only one central bank in the country with a few offices, but there are a number of commercial banks in the country with a number of branches. After that, we move on to the role of the central bank. The first and the most important function of the central bank is it acts as a bank of issue. Issue means it prints note. It has the monopoly of note issue, and currency notes are issued by the central bank, are declared unlimited legal tender throughout the country. Okay, central bank is the only one who has the right to print notes, and the notes printed by it have unlimited legal tender. That means it can be used up to any extent. This monopoly brings about uniformity of note issue. That means each note printed is exactly homogeneous. Second, it helps the central bank to control how much credit is created by the commercial banks. Because how much money commercial banks have, that much loans it can give. Central bank controls it. Okay, since currency notes are only printed by one organization, it provides prestige to that currency note. And it being the currency notes being the medium of exchange deserves that prestige. Lastly, it enables the government to make changes in the note issue and thereby earn profits from it, because the cost of printing a note is quite less than its actual value, face value. So the difference is a profit of the bank. Moving on to the second function, it acts as a banker. Banker means acts as a bank. Okay, it acts as a banker agent, and advisor to the government. As a banker, like when you have an account with SBI, SBI becomes your banker. If you have an account with PNB, PNB becomes your banker. Now, as a banker, what does the commercial bank do for you? It accepts deposit, gives you loan, and provides many other facilities like investment decisions. It helps you in making investment decisions, pays you electricity bills, helps you in booking tickets, transfer of money, etc. The same work is done by the central bank for the government. It keeps the banking account of the central and the state government and makes payment. If the government has to pay somebody, central bank does that. If the government has to receive money from somebody, the central bank does that. Secondly, it provides short-term advances, that means loans to the government whenever the government needs it to tide over temporary shortage of funds if the bank faces a shortage of fund. It also advises the government on how to deal with the money of the people, where to invest, on all types of monetary and banking matters. Then the next function is, you remember when we were discussing credit creation, we said 10% reserve the commercial bank has to keep. Okay, that reserve is kept with the central bank. Central bank is the custodian, that means keeps safely the cash reserves of the commercial bank. All the commercial banks have to keep a part of their deposits as reserves with the central bank, and hence the name Reserve Bank of India. Okay, then moving on to the next function. It acts as a custodian of the foreign balances of the country. Foreign balances means exports and import receipts and payments. We make payment in foreign currency when we buy goods, and an importer earns foreign currency, and an exporter earns foreign currency. But the exporter cannot use the foreign currency inside the country, so he exchanges it and converts it into our currency. The central bank keeps all the foreign currency which her country has. So when an exporter earns foreign currency, he gives it off to the central bank and receives money in return. And if an importer needs foreign currency, he purchases it from the central bank. Then it is the lender of the last resort. The central bank lends the money to commercial banks. Okay, the commercial banks first try to collect money from other sources. Like commercial banks' main source of money is the money deposited by the people in the banks. Okay, then it tries to arrange money from other banks. In case it is unable to arrange money from any source, that time the central bank borrows money from the commercial bank borrows money from the central bank. And which money? That reserve which it has kept. Every commercial bank has a reserve with the central bank. That reserve is borrowed from the central bank. Next, moving on to, it acts as a central clearance, settlement and a transfer agent. Now, meaning of this term. Suppose you have an account with State Bank. B has an account with Punjab National Bank. Now, A has given a check to B. A has an account with SBI, so he has a check of SBI. B has an account with Punjab National Bank. A has given SBI's check to B, who has an account in Punjab National Bank. B needs to just deposit the check in his check in his bank, PNB. Okay, PNB will collect the money from SBI. So throughout the day, lakhs and lakhs of consumers carry on these type of transactions. So at the end of the day, various banks have to pay, like SBI has to pay PNB, PNB has to pay Allahabad Bank, Indian Bank has to pay Axis Bank, etc. Throughout the day, so many transactions take place. At the end of the day, every bank has to pay a huge amount of money to other bank. Those transactions are known as interbank transactions. Now, when the bank closes, if the commercial bank starts settling, they will have to work whole night. So in this case, central bank helps out. How? Central bank has the reserve of each bank. Okay, using that cash reserve, it clears. Say, it in the central bank's account. Okay, in the central bank's account, whatever amount has to be paid to SBI has to pay PNB. Suppose SBI has 5,000 cash reserve and PNB has 5,000 cash reserve. Now we saw an example where SBI has to pay 1,000 to PNB. Now central bank will transfer cash reserves from SBI 1,000 rupees to PNB. Now SBI has 4,000 cash reserve, PNB has 6,000 cash reserve. Money remains with the central bank, only the transactions in the entries are made. This is known as clearing house age function of a central bank. Then comes the next important function, controller of credit. Commercial bank is a creator of credit. With a small amount of money, we saw an example where with 1,000 rupees, the bank could give out loans many times more than its value. That is known as creation. Central bank controls the power of the commercial bank to create credit. Now, how it does so, we will discuss in the next part of the chapter. Few more functions of the central bank. First, it acts as a banker to the banks. There we studied that it acts as a banker to the government. Here we are studying that it acts as a banker to the banks. Okay, it keeps all cash reserves of commercial banks. It provides them loans whenever they want to. It provides them guidance and direction. Okay, then it promotes and develops other banks. For that, what it does? Rediscounting of bills of exchange. The central bank does the work of rediscounting of the bill of exchange which the commercial bank has. Subsidies, concessions to encourage the growth of various commercial banks. Then it helps the development banks. Banks' work is to develop other sectors. It helps the development banks to provide funds for the development of agriculture, industry and other sectors. Then it promotes development of money and capital market. Money market means where we transact with money, take money, buy money, sell money. You deposit your money in the bank. Bank gives out loan. All that comes under a part of the capital and the money market. Lastly, it develops monetary policy to promote economic development. Okay. Last function of commercial central bank is it helps in publication of economic and statistical information. All economic information of the country, inflation, deflation, price rise, price fall, GDP, whatever is collected by the central bank and published so that the general public comes to know about the condition of the country.